Hey guys, this is Mike from Sharing in the Disruption podcast, and right now I'm doing something new where I'm going to be focusing on one specific stock, particular one that I'm interested in and that I've actually been in for a little while. I'm doing this one in particular because their earnings came out very recently, and that is Roku. Now, Roku is, most people know of them as a hardware manufacturer in streaming. They have, for a long time, they've been out and they have those little remote controls that allow you to kind of have a platform in which to view streaming. Whereas like people like Netflix and Disney, they don't really have their own hardware. Amazon's got its Fire Stick and the box, and Amazon produces its own content. The difference is Roku doesn't really produce its own content, but Roku has some of the biggest share in the platform itself. And Netflix, if you'd invested in that early, that really took off. But you still have a lot of people that watch regular television. So I think there's still a lot of room in the streaming space to grow, and you can tell that a lot of other companies have realized that because you've seen so many competitors jump in for survival. This year in particular, you had Disney Plus jump in, and then you've had, I think it's NBC with Peacock and AT&T with HBO Go. And so Roku, I think, is a particularly interesting stock because they are agnostic about, which meaning that they don't really produce their own content, and they really benefit not from like outbesting a competitor, but by people moving away from traditional TV onto streaming in general. And they host all different platforms. And so they've actually seen some really big growth, and their earnings just came out, and I think they were pretty satisfactory. And so what you've got is streaming. Right here. And streaming can mean, let's clarify what we're talking about, because streaming can be a few different things nowadays. Streaming just being like pulling entertainment from the cloud, and where it's not stored in one space. And we have three major types of streaming going on right now. Probably two of the mature versions of streaming is movies. I wouldn't even say it's fully mature, but you've got movies and TV right here, and you've got your Netflix, Disney Plus, Peacock, HBO. You're going to have Apple TV, or their version of content, and then you've got Amazon. So these are all different apps, or like platforms for content. So Roku was one of the original ones to come out to host these platforms. You have smart TVs, and then Roku made normal TVs into a smart TV. And so Roku kind of acted as an intermediary. You would go onto the Roku, and then you have like an app store, like on an iPhone or Android device. And then you can access these different platforms. So as more people move from your traditional TV onto streaming, Roku benefits from that. because they get fees every time you download all these things. You can put like music on the Roku, like Spotify and all these different apps. So they have their own little app store, which they get revenue from all these. And they made some partnerships years ago to start targeting ads. And Roku actually has their own channel now, which is called Roku TV. And that is actually a free channel, but it has advertisements. So they can get advertisement revenue. And an acquisition they made this year allowed them to do that in-house, where they had been using other companies before to do that. Now Amazon obviously has its own box. And why I'm separating this is the hardware. So from the Amazon box, I believe you can access all these different ones. And then Apple has its own. And what we don't think of a lot is some of the other different platforms like Xbox, PlayStation. Those allow you to do the same things. So within streaming, you also have music. And then you've got stuff like Spotify, Apple Music, you got Google Music, Amazon Music. And then that's more of a mature industry that's been around for a little while. And what you've recently had come out is gaming streaming. And that hasn't really quite taken off yet. I think the only group that's really successfully done that is PlayStation. With Sony and Google just came out with a version called Stadia, and I think they've had some troubles with that. Nvidia's coming out with that, something like that. But this really is an untapped market so far. And gaming's unique to some of these because with movies and TV, you actually have a lot of, this is cannibalizing sales from traditional TV. So Roku is benefiting from stealing market share from other traditional cable, but I see them just getting more and more of a piece of the pie, as long as they stay one of the market leaders. And then music, really, that's cannibalizing itself too, because I mean Spotify stole market share from Apple, who was selling songs individually on MP3s. Spotify also helped put more nails in the coffin on CDs and stuff like that. Kind of owning your own music and record labels, but actually Spotify has really helped some of the record labels. But you've got a big competition right here between all these different music providers right here. So I'm going to erase this real quick. And we'll talk about how Roku's doing. Because you want to see that Roku is out-competing others. It's really not a super crowded space as far as the hardware goes, except that Roku's going up, and a lot of investors have been betting on Roku to fail, just as Spotify to fail, because they are a newcomer to this whole space, and everybody expected like an Apple and a Amazon and Google to just crush everyone. But it hasn't necessarily been the case, and especially with Roku, they've really maintained their lead. So I've got some numbers right here. Let's see. Let's draw a little graph. We've got, I'm going back as far as 2015. So 2015, they made $320 million. which isn't nothing. And then they lost $41 million that year. So this is what they just brought in, net revenue, and then this is their earnings, and their earnings are negative $41 million. So you want this to keep going up, especially as a young company like Roku. You don't want to see them just kind of, and you don't want to see them going flat, and you definitely don't want to see them going down at this point. So as long as they're showing good growth, I think that's a very good positive sign. 2016, they made $399 million. So they increased by a good bit right there, and then they lost $43 million. So pretty close to the same amount of losses, which you'd expect. They're putting a lot back into the company, maybe making some strategic acquisitions. They haven't become vertically integrated where they're doing all their own stuff yet. But there's a lot of marketing expenses and research and development at this point. So now we're up to $512 million by 2017. But this year they drastically increased their losses to negative $64 million. But when you really think about it, that's nothing compared to companies like Uber and some of these companies that are just burning through. Uber was like negative $4 billion at one point. And then in 2018, $743 million. And then you've got $9 million in losses. So people are pretty happy about that. That was one of their lowest years of losses. And so it looked like they were actually about to turn a profit. Now this year, they increased their earnings, this is the good part, to $1.13 billion. So they surpassed that $1 billion mark for the year. But a lot of investors didn't like that they dropped down to, they ended the year negative $62 million. So they kind of dropped back to, it shows that they're having to start investing again heavily just as they did before. Increased competition, maybe acquisition cost per customer is getting tougher. So this gives them about a 50% increase each year though, which is a very good, as when you're investing in a company, I mean, and they're growing 50% a year on average, I mean, that's pretty good. So they should hit profitability soon, and I think these numbers are somewhat misleading because of some of the investments I've seen that they've made. In 2016, let's look at some of the acquisitions they've done. They actually had Netflix as an investor in 2015, which makes me wonder if they'll ever do some sort of partnership. Netflix, I could see them wanting to get into hardware at some point. Maybe Roku could be an acquisition target for Netflix or some collaboration, because Roku is actually sharing office space with Netflix right now. But we have no evidence of that, of a collaboration between the two. So they started targeting ads in 2016 in a partnership with a company called Magna. So they partnered with them so that they could start bringing in more revenue from ads by targeting ads. And then they also partnered with a company called Nielsen to increase ad effectiveness. And then in 2017, we see an acquisition of a company called Dynastrom, and they also got Aeros Tech, and this actually put them in this was a hardware acquisition, something with speakers, which they produce hardware, and they I think it was a speaker bar. I'm not really sure what they've done with that a lot. I know they have a system for companies to play music, but I don't know that that's really led to any big breakthroughs on their technology. Plus Aeros. I don't think that's been a huge driver for them. But this year, a lot of investors really got excited because they purchased a company called DataZoo for $150 million, which, as you see, they lost $62 million this year. So if they hadn't had that acquisition, they would actually be positive. So between that and a lot of marketing and a lot of different things, they put a lot more things back into the company this year, which should boost growth a lot more next year. But DataZoo allows them to do a lot of this data mining and targeting in-house. So maybe they don't even need to pay these guys anymore. So that actually will increase their bottom line. So we had the acquisition of DataZoo, and their stock jumped quite a bit upon that acquisition. People were pretty excited about that. They have quite a few products, and you've seen all the sticks, like the Roku stick, and they have different versions. They have ones for like 4K TVs. So a lot of what they sold for a long time was in hardware that integrated with your TV. And then they've kind of done some side projects. They had something for businesses. They have a streaming player. They have a radio, like a clock radio. Some products I haven't really even heard of. But one of the biggest things they did was a lot more TVs were becoming smart TVs, and they started partnering, as Amazon also does, and now Apple's trying to do. They started partnering with different TV manufacturers. I think the first TV I saw with Roku integrated was TCL, and I know some TVs make their own. I think they partner with LG at this point, and a lot of the different TV manufacturers, Sony, Samsung. So what they do is they have that software that you get when you had bought their hardware is now integrated with the TV, and at that point you're not going to switch out the hardware, whereas you could take a Roku stick out and you could switch to Amazon. You're locked into their system once you have it built into your TV, and so they get profits every time one of those TVs is sold. Now they have the biggest market share right now. That's why I'm still very confident in them. You can see that they have this 50% growth, and accounts for 2019 were up 37%. As far as the rankings, we've got Roku is the leader with 45 million subscribers. It's probably higher now than when these numbers were posted. Number 2, you wouldn't probably expect, is Sony PlayStation. But pay attention to how far back they are. 30 million. So that's quite a difference. 15 million from first to second place. So, and Roku really is the only one growing like they are. They're really on a path to just keep taking more and more market share. When you look at graphs and kind of trajectory of everything. Tizen, I'm not really sure who that company is. They have about 30 million. That might be a Chinese company. Xbox. $25 million. So you've got a lot of these guys in the same ballpark battling it out. Google, I guess it's talking about Chromecast, is $25 million. Fire TV. So I thought that Fire was their main competitor, but Fire, as you can see, is a ways back, and you'd think a company like Amazon would be able to overtake Roku, but it just shows that there's space to carve out your own niche within some of these industries. You've got Nintendo down here. At 18, and then Apple is actually 9th. Eighth is just a web operating system, but you've got Apple TV all the way down here. And as the biggest company in the world, it just shows that you can't rule a company out like Roku. And I hear people rule out like companies like Roku and Spotify all the time because, the incumbents, the big companies are going to take them out. And as you can see, Apple, these are some of the biggest companies in the world right here. Microsoft, I mean, Sony's pretty big, but you think Sony would be getting beat out by some of these companies too. So it just shows that Roku, they had an early mover advantage. They got into the space, and they've kind of maintained it, and that they're determined to maintain it. The CEO of Roku, I think, has a background in, he worked at Netflix, so he knows streaming, and we can look at the stock price right now. Let's see that. Like I said, the stock numbers were just released. And you had about we'll do the quarters for this year. Was Q1 was 200 million. Q2, 250 million. Quarter 3 was 250 million. And then they jumped up to 400 million in quarter 4. So they have a good track record for increasing everything. They just haven't been profitable yet, but obviously it took Amazon 10 years to be profitable, it took Tesla years to be profitable, and everybody's hating on them. So I would expect when Roku finally hits profitability, people are really going to start getting excited about them again. And they've seen kind of these surges in popularity this year too. It's been $90, it's been $120. Right now, as far as this quarter, you also want to think about how long people are watching Roku. They added 4.6 million accounts in quarter 4. So they went up 4.6 million counts. And they're up 36% over the year. And they're up 68% year over year. To a record of 40.3 billion in 2019. So, let's see. Their stock right now, as of this, is $124. And it's at kind of the low point for the year. It's the 52-week range is $51. Their low is $51. And their high is 127. So as you can see, they're close to their yearly high right now. So you may wait for a pullback if you're interested in investing in something like Roku. I think you could find a better deal for it, but it's spiked in recent days. But I think it has a long-term potential. So if you're looking for a long-term stock, I think you could start building up a little bit of a position. I would definitely start small and just kind of ease into it, because you just never know what's going to happen this time of year. But I think just starting to build up a position in Roku wouldn't be a bad idea, because I think it has a lot of long-term potential, but I think you could get it at a lot better price than what it is right now, because it's on the high end, and so I think you could see a pullback sometime this year maybe, and I would maybe look for getting it maybe a $90 or something like that. That's what I'm going to be looking for. But I slowly just build up a position in Roku. Whenever I can, I just buy a little bit here and there and kind of get the average of averaging out my getting the best deal that I can for Roku. But I am not giving direct advice on stocks, and so just listen to your gut, and make your own decisions and research everything and make your own decisions. And thanks for listening to me, and hope you enjoyed it. Click like or subscribe on my channel, and see you later.